Marko Kolanovic, a big voice on Wall Street. I want to get your take on what he said. I mean, he hit on a number of points there, including inflation. But the one I really want to start off with is concentration too high. So our data team, they're crunching some of the numbers. So if you look at the Mag 7, that's expected to have 40% earnings growth, while the rest of the S&P 493, a 3% decline. Does Marko Kolanovic, does he have a point about that concentration?
I think there's certainly a point about the concentration and the fact that you can't have a broad equity rally in the S&P if you don't have participation from those stocks. I think it's less concerning, though, when you think about a broadening of the growth outlook. And so, that growth outlook broadening means you can have earnings in those other companies expand even further. And that's what you've seen this year. So last year was all about those big stocks. And this year you can see more of a broadening. All
right, so you're expecting to see a broadening. Are there any sectors that you think can help drive the market? You already said it, and we're not moving higher without tech participating and taking leadership. But is there one sector in particular in mind that you think can help a possible rally?
So something that we've been talking about quite a lot is more global growth optimism. And in particular, we see more of a bottoming in China. You've seen stimulus come through, and it has for a while now. But last year was a very unique recovery in terms of being consumer driven. This year, it's more of the regular recovery that feeds into manufacturing. So you're seeing a bottoming there as well as commodities. So for us, we like sectors that are more related to the commodity rebound, and energy in particular is one example.
All right, I want to go back to that Kolanovic note just for a minute. Another point of his was that valuations have been stretched. We had a guest on yesterday said something very similar. If you look at the S&P, price to earnings 12 trailing months. We usually look at the 4, but the 12 trailing at just over 22. The prior year was at over 18. So we have seen valuations kind of get extended. In your mind, are they too extended right now for the market to continue to rally? Do we need to see that pull back for any extended move to the upside?
Valuations are a bit of a tricky one because they do predict returns, but in the very long term. In the near term, they're very poor predictors of returns. What you actually see is expensive markets tend to get more expensive. The problem is right now we have high interest rates as well. Right. So to get that expansion or to get that that price increase, you need earnings to come up. And the positive thing is that earnings have backed up the PE expansion. And so if we get that continued, you can certainly see more price upside.
So you mentioned what I was going to talk to you about next. Higher for longer rates obviously have been higher for longer than many people expected. A lot of people have already expected a rate cut. I'm looking at the CME Fed Watch tool. They see an 88% chance of a cut in September. At the same time yesterday, we had Trivariate Research come out and saying no cuts would actually be a bullish sign. That'd be a great thing because the economy is strong. Where do you stand? Does the stock market, I'm not talking about the economy, does the stock market need at least one cut to have another strong year, or can it move higher without that?
I think it certainly can move higher without that, because that's what we've seen throughout this year, right? We're having a bit of a wobble now, but you've had geopolitical tensions as well as higher interest rates. And so I wouldn't put it all down to higher interest rates. And throughout this year, you've had that dovish bet recede, and the growth outlook being the reason for the dovish bet receding has meant that you've had equities rise still. It makes it a bit harder because, you have a comparison of a 5% in a treasury yield that you could buy, but it certainly doesn't mean you can't get gains.